Good morning. Good morning. I hope everyone out there is having a good start to their week so far. Certainly an exciting week. Started off with a pretty nasty open on Sunday and then just kept building into that sell until we saw a bit of bottom formed on Monday morning. And then we kind of didn't look back and pushed all the way up to SPX 5600 and, sort of popped a little bit above. And then Globex last night kind of taking us back down again. So this is a really interesting setup for a potential turnaround Tuesday. Certainly something we'll be keeping our eyes on and talking about a little bit more. And while I'm presenting, y'all are welcome to ask questions. I will be getting to all of your questions. So just be sure to drop them in the chat and then give me some time to make sure I'm able to get to those questions and answer them for you. But I think this will be a fun session. There's a lot going on out there, a lot to cover. And I've got a pretty cool presentation put together for y'all. So let's hit it off. First, just quickly, the disclaimer. And really, the gist of this is be careful. Don't put more money at risk than you're willing to lose. Now, the folks at Bookmap would love for you to join the Discord here at discord.com/invite/bookmap or the QR code on screen. Lots of cool stuff going on all the time, including live events, educational events, trading events. You can get to know the community. You can learn more about the software. So, cool place to check out. And I'm live presenting there right now, as it turns out. A bit more about me. I've been trading since 2005. And those 2 decades in finance have afforded me the opportunity to realize that one can never really stop learning. And so that opportunity is a generous one because I am always taking upon myself to try to learn something new every day and try to find how I can apply that to my trading, to my investing, and just in general as being a student of the world. So the one lesson that I'd like to just share with everyone today from those 2 decades of experience is be patient with your journey. You don't need to force yourself to an arbitrary goal or an outcome that you're trying to get to. Try to enjoy the journey itself. Try to get better at trading and try to make that your craft. And eventually, if you're serious about it and you put in the work, profits will follow. Consistency will follow. But don't get too ahead of yourself. Don't put it all on red. Don't go super leveraged on one bet and hope for the best. And honestly, the worst thing that can happen to people that do that is they win that bet. They think they've got the Midas touch. They upsize and then they blow up their whole portfolio because it was just blind luck. So be careful out there, especially now with a less liquid market or the more volatile trading environment with the size that you're willing to put on your trades because you're going to need wider stops to not get wicked out in this environment. Let's talk a little bit about why I watch order flow. Then I've got some cool charts I want to share with you all. So it's really simple. For me, I like watching the differentials, or what we call deltas. Bookmap shows you that in 3 really easy to see areas: the delta bubbles, the delta volume bars, and also the session volume profile deltas. And those can all give us a sense as to who the aggressor is and where and when. That's helpful. The other part is looking for large passive order flow or icebergs. So looking for icebergs is made quite a bit easier with Bookmap or Rhythmic MBO data packages. You can essentially see what are designated as icebergs and stops in that order flow. You can also change your settings so you're only seeing the ones that may be a little bit more important. At least that's how I like to do it. An exhaustive trading action when one party gets more offsides. This is something to take into consideration as well as a potential opportunity for a reversal. Often is the case that when one side gets really, really excited and overdoes it, you get a bit of a reversal to the other. So, exhaustive trading action, I've made an indicator for it called the exhaustion indicator. It fires off a voice alert and a graphical icon on screen to show when these exhaustion events happen. And these can also be helpful to see an exhaustion event happen, let's say seller exhaustion, and then you have a meaningful amount of buying, passive buying coming in via icebergs, that can help to mark a shift. That's something to keep in mind as well. If you're looking for opportunities to try to scalp a reversal intraday, you see that exhaustion and you see larger desks taking advantage of it, that can mark a reversal too. Obviously, we want to watch the price action, we want to watch the flow, both in the futures, but also just as, if not more importantly, the options, SPX options as well. We'll talk about that a little bit more once we fire off Bookmap on screen. And just a quick heads up before we get to the charts, we do have some big events coming up on the calendar today. Right now, the Fed's Barkin is speaking, which may add a little bit of pre-market vol. But the big events are S&P Manufacturing PMI final coming in at 9:15, forecast of 49.9, previous reading of 49.8. Then U.S. JOLTS job openings. This could move the dial today. The forecast is 7.65 million. The prior reading was 7.74 million. This has been an event volatility catalyst for us. Then we have U.S. ISM manufacturing PMI at 10 a.m. with a forecast of 49.9, prior reading of 50.3. So let's break it down. PMI final from S&P is going to be important, but most important are the two events at 10 a.m. JOLTS job openings and manufacturing PMI. For JOLTS, if it comes in meaningfully higher than expected, let's call it 7.8 or higher, that's likely to be a bit risk off, probably push up rates a bit on the long end and push down stocks. If it comes in at 7.5 or 7.45 or lower, that may be seen as bullish because it could pull forward the idea of Fed cuts. So it could push down rates, could push up risk. The other side of it, U.S. ISM manufacturing PMI coming in at 10 a.m. with a forecast of 49.5. I would be watching prices paid and employment on that. Prices paid estimate 64.6, so continuing to rise. And employment estimate 47.2, continuing to fall. Those are the two big ones I'd be watching this morning at 10 a.m. So I'll stay on a little bit longer. I usually cap off about 10 a.m. Eastern, but I'll stay on for about 3 to 5 minutes afterwards so we can parse that data as well. So a theme here has been breaking down of leadership stocks. I'm going to highlight two. NVIDIA has been the centerpiece of the AI narrative, and the AI narrative has in no small part been what's helped to drive the market really from late 2022 all the way through the end of 2024. That narrative is breaking down, and so too are some of the leadership stocks. And that is to say, we're actually making a lot of progress in AI on the software side, making things more efficient. That's reducing the need for hardware spend. As that's happening, there is some competition ramping up in specialized chips for inference and training. Amazon's Trainium 3, another chip coming on board soon, kind of going along that same path of making specialized silicon for use cases rather than using the Swiss Army knife that is the GPU, which isn't necessarily the most efficient path. We're seeing other types of circuitry come in. So you combine that increase in efficiency on the software side with more hardware coming in to make the task less cost intensive. And that's not necessarily a good narrative for NVIDIA. So that has caused NVIDIA to now form a downtrend of lower highs and lower lows. And we just made a new low recently, confirming that downtrend is still in effect. So that's something to take into consideration, particularly given yesterday's reversal off the lows. Who did not participate in that reversal? It was tech, right? Tech was nowhere to be found. So even though we came off the lows, we really didn't make much of a meaningful bounce. And I think that's a bit of a concern to keep an eye on. Let's talk about Meta here. Meta was one of the leadership stocks in the AI space as well. They've been building their platform to offer AI inference to their clients, but also this Llama set of models that now there's growing speculation they're falling behind. In fact, when DeepSeek R1 came out, there were public message rooms talking about how Meta was in a panic And some of the employees speaking anonymously were talking about how essentially this has upended Llama 4 and the progress they were hoping to show, which was more incremental than revolutionary. So we're still waiting for Llama 4. It's supposed to be a model that brings about some degree of reasoning. It's supposed to have vision capabilities and maybe even image creation. There's a lot of rumors circulating about where it'll be, but the key question is, will it be more advanced than Qwen 32B or the QWQ reasoning model from Alibaba? Will it be more advanced than DeepSeek R1 and some of these other more advanced models that have emerged since Llama's 3 series? So for now, that narrative is being, again, challenged. How much of this AI capex is something that they're going to be able to monetize, particularly given they've spent so much and don't necessarily have as much to show for that as one would hope. On the other side of the ledger, however, we can't forget that Meta has over 100,000 H100 GPUs that they're putting to work for training Llama 4. So if those resources are used efficiently, we could see something pretty impressive. The onus is on them to demonstrate where they are in the AI arms race. Now, here's a really interesting one. This is the S&P 500 High Dividend Large Cap ETF H, and this is SPHD, okay? This one has been outperforming the broader market. You can almost not even tell there's been a correction this year. So NVIDIA and Meta, you've got everything kind of nasty that you don't want to see. They pulled below their high volume nodes. They have these bearish cloud twists. You have momentum turning negative, just kind of a lot of nastiness. SPHD is largely the opposite. It's gone from an uptrend to consolidation, but in a correction, to see something like this simply consolidating, that relative strength is encouraging. It's also been a part of one of my favorite pair trades this year, long SPHD, short SPHB. That's the S&P 500 High Beta Large Cap ETF, which has been rolling over. The delta between those two, or what the pair trade could yield, is close to 20% profit so far year to date in a single quarter. So that rotation has been profitable, folks, moving out of high beta, coming into large cap safety trades in these high dividend defensive stocks. And so you're capturing both sides of that rotation in that pair trade. But nevertheless, there is still opportunities for upside in this market. Regardless of what the broader indices are doing, we see defensive performing. Year to date, there's still a lot of stocks that are in the green, including consumer healthcare stocks, some of the defensive players like your Walmarts of the world, your Coca-Colas, your Hershey's, the utility stocks. They've also done pretty well, but also energy. Yesterday, energy was on fire, and we still feel that sector has some room to go as well. Now, let's take a look at the S&P 500 index. We did get back into this chunky supply zone yesterday, but I'm not so sure that tells us we're out of the woods. And this morning's price action kind of adds to that. But I tweeted this chart yesterday before the Globex session saying, we had a nice recovery off the lows. Buyers definitely put in a lot of effort, but now we're just back into this high volume node just around SPX 5,600 into yesterday's close, which is also a giant gamma level. Likely we get kind of stuck here, maybe even reject here. Obviously, we'll see what the day brings us. And, I'm looking at 56.44.25 as my pivot. We'll get to that a little bit later. Above that, I'm still looking for some long trades intraday. But I think on the longer term time horizon, for swing trades, for investors, I don't think we're necessarily out of the woods until we get more certainty, more clarity of policy from this administration. So let's pivot, as it were, from SPX to the S&P 500 futures chart. And these are some of the key pivot levels. We can see that that lower pivot, that 55.72.25, has been well defended so far. And that's an area that I'm going to continue to watch. If we violate that pivot to the downside again, I think we're going to make new lows. So I do want to see us hold above that pivot if we're trying to make a low here. Again, I'm skeptical that we have. I think it's more likely that we get a lower high and continue lower from here, but unless we get that certainty, right? That's the big caveat. But nevertheless, in the interim, we may be in the process of making that lower high now. So watch that 56.77.25 major pivot overhead as a potential resistance level, above it 57.23.75. Now let's move on to the NASDAQ. NASDAQ actually looks quite a bit weaker than the S&P. You can cross compare. The S&P was able to defend those prior lows. It did make a new low, but it defended and moved higher above that into the close. The NASDAQ made a chunky new low and then barely got above it. That's some serious relative weakness. It's also just kind of not convincingly back up into the higher part of the volume profile. So the NASDAQ may be a bit more volatile here in either direction on the basis of what we're seeing on its chart. And with both, we're below that 21-day moving average, which you can see during the uptrend was a meaningful area of potentially providing support or at least retesting momentum and having buyers step back in. Now it's become the opposite. Now we've rejected and we continue to reject that 21-day EMA. And this is also something we're seeing on the S&P 500, that continued rejection of the 21 EMA and that bearish cloud twist in the Ichimoku cloud. We can see that in both the NASDAQ and the S&P, which is just a bearish omen. It gives us a sense that momentum is no longer favoring the buyers across multiple different metrics. So that's something to take into consideration as we get into the trading day today. It is a very volatile environment, and it is one that favors downside on the interim term. But during today's trading day, as we know, in negative gamma and low liquidity, the market can do whatever it wants to do to digest this. This is also the first day of the second quarter, and we can reasonably expect there'll be some institutional buying during the first and last hour as a result of that, as a result of them adding to those funds. Let's look at the NASDAQ pivot chart as well. 19039.25. That is going to be an area that I'm watching as a major support. That was just around the recent low that we defended. If we continue to move down there and test that pivot, I'm looking for more weakness. So for now, NASDAQ bulls really want to see this thing push above 19,763 on a closing basis. That would give me a sense that maybe the near-term lows are in. Again, I don't think the overall corrective impulse is over, but that doesn't mean we can't consolidate before making our next move. And that would be what that would look like if we move above 19,763. That could be us kind of forming a lower high and getting ready to push lower. Remember, markets don't move straight. They tend to use stairs in either direction. And this correction that we've had this year has been extraordinary. It's actually been one of the most brutal corrections in terms of its velocity, if it even is just a correction. And I'll just leave that thought out there with you all. And we are, again, deep in negative gamma territory. So here's our gamma flip chart. You can see that this is pretty chunky. We're almost 250 points into negative gamma. That means that you're more likely to see rips bought, dips sold into. That's a volatility catalyst in both directions. Add to it, the order book depth in the S&P is not that deep. It was about 30K yesterday. That's pretty low. That means it doesn't take that much size to move the markets around. Now let's talk about some of these options levels. You can see the chart on the left, but I broke it down for you in written form. These are the key levels that I think are worth watching for now. And I've broken them down to both SPX and ES levels, ES in the parentheses. So you're welcome to take this chart or these levels and screenshot it for later. I'm going to just go ahead and also share this on social so folks can see this. And then today's pivots. These are the levels I'm watching for ES and NQ for their June contracts. And I'm also going to go ahead and share this out there on social so you all can check that out. If you want to screenshot it on your own platform, you can. And then let's quickly get to some deals, and we're going to dive right into Bookmap. Markets open in just under 12 minutes. Should be an interesting open here. We see pre-market firming up just a little bit here, closing in on that ES pivot, actually. We're just below that 56.44.25 pivot pre-market here. So if you'd like to check out Bookmap, you can get up to 40% off. Visit Traderade.com/bookmap. That's Traderade.com/bookmap. And you can get up to 20% off Traderade.com by visiting our website at traderade.com and using the code Mayhem20 at checkout. So feel free to screenshot these deals for later if you'd like to utilize them. If you want to figure out whether Bookmap fits for you, these deals will be available for you later as well. So let's pull out of the presentation here. And let's get right into Bookmap pre-market. And folks, while I get everything squared away, if you guys have any questions while I'm kind of getting things situated here, let me know. All right, let's take a look around the markets and see what all is going on out there. So we got gold on screen. Gold has had such an impressive run. I feel like we need to just pull this back into TrendSpider just to take a look at gold, which will use the XAU USD chart. Let's just, this is already impressive enough on the daily, but let's just pull this out to the weekly. My God. I mean, we're looking at the price of gold nearly doubling here in the last really year and a half. I mean, it's been an incredible move. And I don't know that it's over yet. I would like to see some consolidation. I am getting just a little more nervous seeing how fast it's just ripping and ripping and ripping. I will say, having traded gold since 2006, that I've been around these parabolic moves, and this one is starting to look more parabolic this year. This sort of don't look back, push higher. Now, I do have some nuanced views on gold that maybe don't fit the narrative that it's just an inflation hedge. I actually look at it as more of an uncertainty hedge. And since we're in an environment of maximum uncertainty, it does make sense for gold to get a really strong bid. That being said, however, anything that moves parabolic tends to give back a chunk of that move. So I would still look for gold to come back to this 21-week moving average before I'd really want to rebid it and see how it handles that move. For now, I'm more interested in looking at some of the gold miners. GDX, for example, enormous flows targeting $47 coming through yesterday in a series of sweeps. Some of the junior miners that are really high quality, my favorite being Rio 2. And again, super speculative. All juniors are, but that's where I like playing in that space. And then also just looking at silver. We see the run that copper has had, a lot of that predicated on the structural deficit in supply and increasing demand. Silver should also enjoy a similar run. Now, copper has made new all-time highs in New York pricing, and New York pricing has diverged a bit from the rest of the world, trying to account for some of those tariffs. But I still think that if China is serious about their domestic stimulus, that silver will be one of the key beneficiaries there. China is the second biggest industrial consumer of silver. So let's see what happens between gold and silver. But that is something that I'll be watching pretty carefully here. So Extreme Skeletor gold, we like it. Where is it going? I think that the way that it's trading now is giving us a sense that it just wants to keep moving and probably make this sort of parabolic move with a not so happy retreat from it. So I wouldn't be too surprised to see gold get up to about 3,300 and then retreat back to that 21-week moving average. So we could have another 167 or so dollars of upside. And the reason I say that is just the way that this is moving. If we look at past moves and we sort of measure off that, that would be an area where I'd start looking for some more resistance coming in. But I think the better risk to reward opportunity is in silver and the senior gold miners here. The senior miners have some room to play catch up, and silver does as well. And it also enjoys that dual tailwind of both industrial demand and precious metals demand. All right, so let's get back into Bookmap here. We've got just about 5 minutes and 10 seconds until the market open. Once again, we have S&P PMI coming in, manufacturing PMI final at 9:45 a.m., JOLTS and ISM manufacturing PMI at 10 a.m. Those two, the big ones I'll be watching. Now let's take a look at the S&P and the overnight session. Relatively uneventful. I mean, compared to Sunday to Monday. Now, what do we see on screen right here? Let's break down what all is going on. So first, we do see a little bit of buyer exhaustion happening here. This is one of my indicators. You can see there are 461 contracts involved in that aggression. Part of that was that stop run. That's 390 contracts that were shorts that were stopped out. And now we see a bit of a passive seller, still an open order up here, 153 contracts and an open order from earlier. So just giving us a sense that maybe, just maybe, this level, this 5,600 level that if we translate ES to SPX levels, that's where we're trading at about now, that could be formidable resistance going into the trading day today. And if we look at the options charts, we can see 5,600 is a pretty formidable level of options positioning. And this is a heat map chart. So for folks that aren't 100% familiar with how Bookmap works, what you're seeing here is heat predicated on where there are offers and bids. Offers above price on this current order book, all of the red are offers above price, all the green are bids below price, right? And you can see that then in the heat map as well as how they change over time. And that can be really helpful. As an example, before we get to those events today at 9:45 and especially 10 a.m., you're likely to see this heat map dry up significantly. That is to say, a lot of those offers and bids are coming away before the event volatility catalyst. That's a good reason to be careful trading with size going into those event volatility catalysts, particularly the ones at 10 a.m. Those are big deal catalysts. Let's take a look at the NASDAQ as well. Overnight looks a lot worse than the S&P. You had that move higher and it's been sold into, made a new lower low there. If this ends up being another lower high, it looks like we've got some room to the downside to watch here. And I would also just reiterate, being this deep in negative gamma territory is going to make things just a little bit weird today. So just be mindful of how that may impact your trading. A lot of folks need to adjust to this new regime of wider ranges during the day and not necessarily resolving the question. Like, are we trending? Well, yesterday we got an opportunity to sort of trend in two different ways, didn't we? You know, overnight we had that pronounced downtrend into regular trading hours where we had a decent uptrend. That's the other thing we need to be mindful of. This is a two-way market more than it usually is. You know, during 2023 and 2024, it was almost up only. There were episodes of corrective impulses. This is much more volatile, particularly after we've given back so much. After we've had that corrective impulse, now I expect things to be more choppy and more volatile in both directions. I still think the path of least resistance in the intermediate term may be lower, due to the lack of certainty until that clears up. But I also think that after such a violent move down, and it has been pretty unforgiving for a quote correction unquote, we're likely to see some digestion of that move. So Nasdaq overall looking a little bit less ideal than S&P. This is part of that theme that we were talking about earlier in the slide deck as well. Just about a minute away from the market open. Right now we have S&P futures implied to open around 5601, down 0.2%. Nasdaq set to open around 19,206, down 0.4%. S&P slipping a little more, now down 0.3% to 5596.50. And small caps, the Russell 2000 set to open around 2003.60, down 0.4%. With vol bid just a little bit, spot VIX up to 21.12. Markets opening in 20 seconds. Hi, Ships. You're going to have to give me just a little bit more detail about what you're setting up there. What is exactly your trade setup that is going the wrong way? Like, tell me how you're coming to a conclusion about where you're marking the charts, why you're getting into the trade. Walk me through all of that so I can try to better answer your question there. And folks, markets are open. We can see S&P pulling back. It actually got right up to the pivot and to that options implied resistance level and rejected on both. So we can see that confluence area just up ahead. We got the 5644.25 pivot, and then we have that vol trigger level just around 46.75. And that confluence area, as well as the point of control, now becoming resistance into this open. So this is an interesting thing to see. We would expect to see some institutional flow coming in to buy some of this market for equity allocations, but there is one important caveat I forgot to mention earlier that Aisha mentioned in this morning's Breakfast Bites on Traderade, and that is that we are largely in the buyback blackout period. About 87% of S&P 500 companies are in buyback blackout ahead of earnings, and that is a very important source of liquidity. So that may more than offset the institutional beginning of quarter buys that we have set up for the next several days. And in a moment, we're going to take a look at some of the major stocks. But we're just seeing that selling pressure continuing here. Let's take a look at the NASDAQ as well. Similar look. We're going to just zoom that out, or zoom that in, I should say, a little bit more. Getting some dip buyers coming in right off the open, right off that lower low we saw. Remember, we were talking about that overnight structure, and we're looking at this as potentially becoming a lower low. It hasn't actually yet. We would need to take out 19,312.50 for this to become a real meaningful lower low. Also, I need to check on, let's see here. Yep, there's a few things that unfortunately get reset as a result of daylight savings time that I'm going to need to check on. But I'll leave that for another day. At any rate, we do have a nice chunky bid starting to come in off those opening lows to the NASDAQ. Let's check the S&P. I imagine it's a similar look there. Yep, not quite as pronounced, but it is there. So that brings me to wanting to look at some of the mega caps to see what's going on. So we've got Apple, and let's just show that outside liquidity here. It's a lot more on offer than on bid for Apple, about a delta of 1.4 million, just a little bit heavy on the supply side here. And you could see a lot of that supply just overhead in these offers. That's all those red horizontal bars overhead. So decent amount of supply on this one. We'll be watching it. It is off its lows, however, just testing the point of control from below. We've got Broadcom here. Somewhat similar look, lots of supply, 1.9 million on offer, 226,000 on bid. So again, bit of a supply heavy book on Broadcom. Really, really big bid down there at 160. Amazon, somewhat supply heavy book as well, 1.2 million delta to the supply side. Push to the lows right off the start of the session, and then it's just kind of been rebounding from there. Not a lot to look at on this one, but the supply side, again, pretty heavy on Amazon. Meta doesn't look nearly as heavy as the last three we've looked at, Apple, Broadcom, and Amazon. The delta there is just 40K with actually bids favored on this one. So perhaps Meta getting a little bit closer to its lows based on this order book structure where there is actually a decent amount of demand for this stock. And Alphabet, right off the open, actually had some buying coming into this one. So maybe this one helping to buff the market off of those lows. It does have a decent delta to the sell side, but it's not quite as pronounced as some of these others. Microsoft, similar look as Alphabet, trying to push off those lows. It did dump a bit off the open, but coming back up, trading just around the point of control, 375.04, a delta of about 1.1 million. Pretty heavy on the supply side on this one as well. Then there's MicroStrategy. I include this one for morbid curiosity, and also because it's a great high beta trading vehicle. If you can just hold your nose and understand you're just trading garbage along with a lot of other people, but pretty supply heavy on this one. 1.1 million delta with just 366,000 on bid, just recently making some new lows. And Nvidia, yikes. All I've got to say about this one is yikes. I think this one's going back to 90 bucks and change. Chart strongly suggests it kind of has to go back there and clean up some of that poor structure. Got a lot of demand right under price starting at 105, but 100 is that big, big, big demand zone for NVIDIA. That's where there's over 1 million shares on bid. So that'll be interesting to see what happens if we get to some of these lower strikes. But you can certainly see with NVIDIA, there is a very chunky demand zone right underneath price, starting at 105. So I would expect that to provide some near-term support. But I do think overall, given how this company's narrative has changed, evolved, and become less ideal for its growth, that we haven't seen the lows quite yet. And then there is Tesla. Tesla gets a big pop and now a drop to new lows. And actually, supply and demand on this stock pretty even. So we may be closing in on some near-term lows for it. We'll see how this order book evolves throughout the trading day. And that takes us right back to, let's check the NASDAQ and see how we're trading. So we actually made a new low after that opening high. And we could see some passive sellers offering into this. We could see a bit of an exhaustive stop run for the NASDAQ. Remember, this is not a very liquid trading vehicle, just about 6.4 thousand order book depth. So it doesn't take a lot to move this thing, but it looks heavy. And if you look at that overnight structure, this is a pretty heavy looking chart. So I wouldn't be too surprised if we take out the overnight lows here. Something to keep an eye on for the NASDAQ. Let's take a look at the S&P 500 here too, making new lows in the session. You could see some bids building below it, and that's starting to look a little bit more magnetic. That is to say, we may get pulled into that liquidity. If you think of the market like an auction, there's demand down there. And we could see a little bit more buyer aggression on this last volume candle. These candles aren't just volume candles. They're showing you the difference between buyers and sellers. So there's just a little bit more aggression down there by the buyers. Doesn't mean we're out of the woods yet, but it's interesting to see them step up a little bit. Order book on S&P this morning, 34,000. Not very deep. Let's see if we take the unfiltered view out. Yeah, still 34,000 on the unfiltered view for S&P. So, just a headline coming over the wires from the Fed's Barkin saying tariffs to present challenges to inflation and employment. And he also said earlier that the bond market is pricing in more recession risk, which I would have to agree with. I commented similarly this morning about the move in 10-year yields that we've seen, saying the market really is pricing in a slowing economy. So we are seeing buyers stepping back in here. Let's see if they're able to challenge that point of control. We could see earlier in the session, there was a pretty reasonably aggressive buy delta for this early in the session up here around 56.40. We'd want to see buyers push above that, kind of get back on the right side of that trade. That would also take us above the point of control. And remember our pivot, 56.44.25, which we cleanly rejected earlier. We do want to see a move above there and some acceptance built above there to tell us that maybe we get some long opportunities out of this. We are also still waiting for S&P 500 options flow to really start to come in and help to shape the narrative of the day. We know those S&P 500 options are a big part of what moves the market. About 1.2 trillion in notional trades at the SPX index options every day. 56% of that are 0 DTEs. And close to 80% are options that are expiring within about a trading week or less, to include the 0 DTEs. So lots of short-dated exposure helping to push this market all over the place. Options really are the tail that wags the dog. If you compare that to the trading volume in the S&P 500 futures, that notional that goes through S&P 500 futures contract every day is about 300 to 400 billion. So that versus 1.2 trillion in SPX alone. This doesn't even factor for SPY or all the biggest stocks and all the options flows that move them. Needless to say, knowing what's happening with the options flows are a really big factor for understanding what is happening with price discovery. And that's one reason the SPX options visualizer can be pretty helpful. Plugs right into Bookmap as well as MotiveWave. It's a tool that I built that is available. You can learn more about it at traderade.com/SPX. We'll start to see those flows coming through probably the next 5 minutes or so. The early flows. I would expect to see a little bit of early AM hedging flows as well on a day like today, where you have so many event volatility catalysts this week, including, of course, JOLTS later today, but also non-farm payrolls later this week. And we have US S&P manufacturing PMI data coming out in just about a minute and 35 seconds. The forecast is 49.9. You could see the liquidity starting to drop off the order book just a little bit more here, now down to a depth of 32,000. And there was a reasonably large stop run, stopping out buyers, 391 contracts there. Seeing some volatility here too in these last 3 5-minute candles on S&P. If you're looking at a 5-minute chart, I've got a couple different charts in front of me. If you see that, it's definitely trying to make a directional decision here. Let's put it that way. It looks like it's coiling up for a bigger move. 45 seconds till data. I think the bigger determining factor will be the 10 a.m. data, though, versus this print. We'll see. $20 seconds. $5 seconds. U.S. S&P manufacturing PMI final coming in at 50.2 versus an expectation of 49.9. That's 50.2. Prior reading was 49.8. Pretty much in line with expectations. Not a lot to see here. Next data sets coming up at 10 a.m. U.S. JOLTS job openings, 7.655 million. Forecast, prior reading, 7.74 million. Would be looking for JOLTS to come in weaker for a bullish signal because that would pull forward the likelihood of Fed cuts. So 7.5 or lower, probably bullish. 7.8 or higher, likely seen as bearish. U.S. ISM manufacturing PMI expected 49.5, prior reading 50.3. The headline number will be important, but what's more important for ISM, this coming out at 10 a.m., prices paid and employment. Prices paid forecast 64.6 versus a prior reading of 62.4. So we're looking for prices to continue moving higher. Any relief there would be bullish. If we do get that print or higher of 64.6, I think that is concerning. And then the employment print of 47.2, expected to see manufacturers continuing to have higher input costs, but laying employees off. A little bit stagflationary forecast and trend. So any relief there would be helpful to these markets, particularly on prices paid and on JOLTS jobs openings. And we could see flows starting to come through, overall favoring calls earlier in the session here. It is early yet, though. I like to let these flows kind of take shape. And we can zoom out and see just a bigger picture map of where some of these key levels are. And we do see sellers getting stopped out here. This is exactly the sort of violence I was warning people about, getting shaked out and wicked out both sides of the trade. You had that lower move, shook out 391 contracts, and this push higher shook out 340 contracts. We're getting closer to that pivot, that 56.44.25 pivot now. We have pushed above the point of control. And we see flows on the call side continuing to build, outpacing demand for SPX puts. So that is bullish. Low-key says, hey, Mayhem, I think I'm afraid of news drops. Every time before they drop, I'm forced to pull out. Yeah, I mean, look, at the end of the day, if you're talking about like these scheduled events, I would take a moment to go through the event calendar every day and assign importance. Or you can use things like tradingeconomics.com/calendar, and they give you some degree of what the perceived importance is of these events. Some of these events are big and they can move the markets, and we should be cautious of them. For example, what's about to happen with JOLTS and US ISM manufacturing PMI, you should probably be mindful that that poses a big directional risk in either direction. But, S&P manufacturing PMI that just came in at 945, probably not quite as big of a mover. So not all events are created equal, is the point. There are some that are going to be less of market movers. Like last week on Friday, we had PCE at 8:30. That was a big mover, and it gave us data we really didn't want to see, right? This suggestion that core inflation is picking up again to a potentially high annualized rate of 4.8% if that 0.4 continues. But then after it came University of Michigan, and that data point was simply a revision. It wasn't new data at all, right? It was just a revision of the prior data set. That's not as big of an event volatility catalyst. So it really depends on the type of event as to how much we should prepare for it, how much we should, kind of guard risk ahead of it. So I think that, for everyone watching the event calendar, and I think we have to. I don't think there's any choice about that, or the times where, Trump's going to come out to speak, or when there's going to be, an earnings release from a key player. Any of these things are becoming more and more important to the overall market narrative, especially for a market that's really parsing the tea leaves for clues about where we are with policy, the economy, earnings, etc. So Loki, I don't know if you're using Bookmap or not, or if you have a depth of market or DOM set up on how you're trading. But what I like to do is look for the liquidity to come back after the event, right? So you can see, for example, here's a great little representation of this. Leading up into this morning's S&P manufacturing PMI final print, you could see the order book lightened up considerably right in this area. And then let's call it maybe 2 to 3 minutes after the data came out, liquidity really started to come back. It's still not a super liquid book, but liquidity near price certainly came back. That's what you need to look for, in my opinion. Because if we're trading this and we're trying to get good price discovery, good fills, then we want to trade into a more liquid book. So I would wait anywhere between 3 and 5 minutes after the event to see the order book liquidity coming back. And then if it's a particularly volatile price reaction, I would give it maybe a little bit more time to settle as well. We can see, for example, right here, after this push higher, we are starting to see passive sellers come in and more offers building overhead. So you can assume there is some decent supply here. We have pushed above my pivot, and we're now at key 3 negative. Key 3 negative is the third largest layer of net put exposure here. So this can be a bit of an area of resistance to watch as well. And we are seeing sellers coming back in here. We talked about these 2 passive sell orders that were open, 215 contracts transacted there so far. We also talked about that somewhat exhaustive stop run by the buyers, and now we're seeing just a little bit more selling pressure up here. So we could see this is an area that's sort of being marked as a line in the sand, just around key 3 negative, as another area for the market to prove itself, that it has the demand to push higher. We also see calls continuing to come in, that hot call level and warm call level, 2,000 on each. Let's take a look at where the puts are coming in. Puts are actually leading just by a little bit. That hot put, the most active strike, just around 53.50 SPX. That's quite a bit lower. That is hedging, right? That has all the hallmarks of hedging, way out of the money. Flows coming in the first hour of trade ahead of event volatility catalyst. So it smells a lot like that just-in-time hedging flow, rather than folks, really concerned about maybe anything else in the market. I think they're trying to hedge event risk. And we're just about 6 minutes away from JOLTS and US ISM manufacturing PMI. All right. Just about 5 minutes away before JOLTS and US ISM manufacturing. Again, for JOLTS, forecast is 7.655 million versus a prior reading of 7.74 million. US ISM manufacturing PMI forecast of 49.5, mildly contractive, versus a prior reading of 50.3, mildly expansionary. And ISM prices paid looking for a upward move to 64.6. Also have a headline crossing the wire from OPEC Plus. OPEC Plus is not expected to change its plan to gradually raise oil output from April. And we're retesting that pivot level now. 56.44.25, rejecting a bit. Let's take a look at that put flow. I believe it is building here. Yeah, that put flow much lower is building. 4,000 at that 53.50 strike. So there is some serious hedging going on up ahead of these event volatility catalysts. 200 got a passive order for 200 and on the buy side, and the sell side 215. A little bit of disagreement, but overall the sellers are marking this line in the sand around 56.50 ES, giving us a sense that that aggressive buying up there was not well received. And buyers don't seem to have the demand to push higher from here. Even with this passive order, we can see the market rolling over just a little bit as we're less than 4 minutes away from this data. Also see some chunky put sweeps coming into QQQ, targeting the 430 strike. It's about $38 below price. And they're looking for expiries of May 30th with just close to 900,000, about 870,000 paid for those two sweeps on QQQ, targeting 430 at the end of May. So those are pretty big. Data coming up in just about 2 minutes here. And you can see now that we're approaching this data release, the order book once again is beginning to lighten up. I expect it to lighten up even more the closer we get to it. Order book continuing to lighten up, just about a minute 30 away from data. JOLTS and ISM manufacturing. You can see we're continuing to reject at that pivot at 56.44.25. And we can also see just tape is getting more and more volatile here. If you're looking at a 5-minute candle chart, you can see those candles wicking much more on both sides leading up to this. Then we had a bit of a range expansion. Now we're consolidating that. Perfect setup for a big directional move. And we're just going to pull this back just a little bit ahead of data. We can see, again, put flows are pretty aggressive here, but calls are starting to pick up as well. It's starting to balance out. That's why the midpoint's on screen. showing us there's a bit of a balance. We can also see that there is pretty much no liquidity on the order book near price now. See how much that thinned out ahead of a major event? This is what I was talking about low key. This is why these events can really wipe you out, because no matter what you're looking at, if it's going to be impacted by the event, you typically see the liquidity drying up in that contract or in that asset, in its order book. Less than 10 seconds. I'm going to lead with Jolts. Jolts coming in at 7.568 million, lower than expected. The forecast 7.655 million. ISM manufacturing PMI coming in lower than expected, 49 versus 49.5. Prices paid coming in at 69.4 versus 64.8. Ouch on those prices paid. Ouch. That is a nasty, 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 nasty print. Like, that's exactly what we really don't want to see. Prices paid going up materially, employment coming down pretty meaningfully, and also seeing Jolts kind of confirm that. So I would say that overall, this is a bit on the risk off side just because the prices paid component is so heavy. I think otherwise the market could look past this and look at Jolts and say, hey, this pulls forward the idea of a Fed cut. But I think prices paid coming in at that high is actually giving us a sense that there are a lot of concerns in the manufacturing industry about the impact of tariffs. And we haven't even seen the full impact yet. So that does prime us for more stagflationary risks. And in fact, that was something that we talked about at Macrovisor as our outlook for 2025, that stagflation was the big risk. Well, we're seeing some degree of confirmation that indeed stagflation is the big risk. We're seeing some more put sweeps this time in TQQQ. And seeing some call sweeps into XLU. So very risk-off mood in this market based on the options flow. Let's take a look at the visualizer here, see what it's giving us a sense on. Yeah, puts are still leading the way too. It's not markedly so, but they are leading the way. And those are those 53.50 puts we were talking about a bit earlier. Just a lot of flow coming into those. And we could see the market threatening its lows here. So to recap, prices paid came in much higher than expected. 69.4 versus 64.6. Jolts came in somewhat lower than expected at 7.56 million versus a forecast of 7.6. The employment index also came in weaker at 44.7 versus 47.2. So across the board, the data we got this morning is suggesting more slowing of the labor market and prices continuing to push higher, sort of K-shaped distribution of data outcomes that we absolutely don't want to see. So overall, I'm looking at this as being bearish. I would obviously be willing to look past it if we're able to push back above my pivot at 56.4425, but that's been a pretty formidable level of resistance. Once again, we've rejected lower. Now we're below the big green line. That's the EMA 21 on a 5-minute chart for those that don't follow. And I would be looking for this move to continue to take out the lows and for this sort of prevailing downward trend to likely continue here. So was hoping for better data, but we just didn't get it. Folks, that's going to do it for me. Thank you for watching this episode of Back to the Futures with me, Markets and Mayhem. I'll be back next Tuesday, 9 a.m. Eastern. If you want to learn more about my work, check out linktree/Mayhem for Markets or visit Traderade.com. And you get up to 40% off Bookmap using the link Traderade.com/Bookmap. Scroll down to the special offers. If you want to get 20% off Traderade, visit Traderade.com and use the code Mayhem20 at checkout. Thanks again for tuning in, everyone. I appreciate you all. I'll catch you next week.